Successful traders track their results. Tracking results is very important. It's your scorecard. It tells whether you're winning or losing. Otherwise, you're just doing lots of orders and all that. That's fine, but you really want to know, am I succeeding or not succeeding, right? So tracking results is your scorecard. Are you winning more trades or losing more trades? What's your win percentage? What are your profitable trade percentage versus, let's say, the losses you have? What's your loss percentage? And looking at actual money amounts, because in the end, it's what we take home as far as our profits that really matters. So you want to look at your actual money amounts. And one thing when you're tracking results, and we're going to share some ideas around this, is to give enough time for the number of trades to be valid. Think about it as like statistical validity around that. And there's no hard rule number about that. You'll kind of get a feel after you do some trades as far as, okay, I've done whatever, 30 trades like this and I've lost every one. Well, then you might want to change that concept that you're using, for example. That's really extreme. That wouldn't happen. But you don't want to like trade something twice and find out it didn't work and say, oh, I'm just going to have to change my whole approach. Give it enough time that you feel comfortable that you've given it a fair shot as far as a trading idea or strategy or the combination of indicators you're using, your primary and your secondary and the third one, and how you're using them. Give enough time to show that there's some validity around that. Now, what you want to do is you do want to track every trade, right? That's what gives you data, right? Some of the most successful companies, what they're good at is managing data, big data. We've heard about big data, for example. So you want to have small data, I guess, or big data to you as far as knowing your data, knowing your results. So you want to track every trade. It can be simply just on a spreadsheet or whatever. So you want to track every trade. You do want to, if you have an outlier trade, something that's outside of your normal trading norm, right? So maybe you have a primary and a secondary that you use as far as your indicators and tools, and maybe there's a third one you use to in some way, that's or fourth or whatever it might be. But let's say sometimes there's an unexpected opportunity where you want to try something that's outside of your norm and to see how that goes and all that. That's fine. Just track that separately because that should not impact your normal trading pattern when you have an outlier out there that you're experimenting with or trying, or you just think you just see this tremendous opportunity. And what this will all lead to is a calculation where you can kind of measure your performance. And that's what we talk about in the next lesson around the expectancy ratio. How much can you expect to make per trade?